Kelowna's real estate market is still in a balancing act. Sales dipped again in October. Prices have stayed surprisingly steady, especially for single family homes. So are we heading into more of a buyer's market, or are sellers starting to get some traction back in Kelowna's real estate market? We're going to break it down what October's real estate statistics had to say for this. So let's get right into it and break down the numbers. Without further ado, it's Mark Coons here with Selling Kelowna Real Estate Group. And if you're looking to buy, sell, invest, here is your market information that you're going to want to know. See how it's going to impact you moving forward. As we're into November, we're starting to see the difference in activity that's happening. Overall, total sales for the month of October came down slightly from where we were in September. At 363 total sales, the new listings are also continuing to see a lot of new listings hit the market, but a lot of them, of the 1,050 new listings hit the market, are also old inventory, because we did see total inventory drop down to 3,500 active listings on the market. So a lot of the new listings hitting the market was actually old inventory. And what that means to you as a home seller, if you're not currently on the market, there is a potential that your home can set yourself apart from all the other ones. Because even though we're seeing new listings hit the market, a lot of them are cancellations and relists. We're also seeing, with a reduction in total listings, which means we're also seeing buyer listings coming off the market, which will probably relist come spring. Overall, that is a pretty balanced market. We're still leveraging and still leaning towards more of a buyer's market, but where we're seeing in the pricing is more of a seller's market, and how single family pricings has continued to increase, which we'll break down more in a little bit. Homes are also taking a little bit longer to sell. 55 days, median days on market, and 73 average days on market. So buyers are taking a little bit more time to decide, and rightfully so. Gone are the days of multiple offers in the first day of offer, and buyers with higher prices are taking that time to do proper due diligence and make sure it is the right product. I was actually in multiple offers last week on a property, so having the right product and the right price, there's still multiple offers out there. Property ended up going for ask price, but when you're looking at it, the leverage just comes down to price. And speaking of pricing, the median date price for all property types, combining apartments, single family homes, all that, was $730,000. And the average was $897,000. This average pricing is mainly inflated due to the $30 million sales. So while demand has slowed, prices haven't really dropped a whole lot, which is really telling us the median prices is a more accurate reflection, which you can see here on this chart, that motivated sellers are still getting solid results when priced right. And that is true with the multiple offer situation. A well-priced home will often draw lots of offers. Oftentimes in the marketplace these days, the active listings, if you want to be competitive and sell, you have to normally be about 5% lower than the ask price, other comparables in the home. So going for neighborhood records, it's kind of not the ideal time for that. But breaking down and getting into single family homes, because every sub market also has its pros and cons. So we're going to look at both single family homes, apartments, townhomes, and compare it to where things have gone in the past. So with single family homes, 172 sales in October, which is a slightly slower month over month. And inventory is up to 1,798 active listings, which is about 9 months of supply. So less supply than the over total market on it. When looking at single family homes, the median price was still strong, $930,000 for the median price, and the average at $1,180,000. So when you're looking at the average price point, we're seeing an average price point kind of in that 1.1 to 1.2 range. Again, this average number is going to be inflated with the $30 million sale. Days to sell, 41 days for the median and 62 days on average. Detached homes are actually holding their value. And we've gone over this, and especially anything that is turnkey or with a suite or rental a potential for some could buy in and maybe use the suite for additional income to justify a little bit higher price point. You're looking at the average sale price at 1,180,000. You're looking at a lot of income needing to be able to qualify to be able to get that right price. Single family homes as well are projected to hold their value more in the long term. With Bill 44 implemented in 2024, the provincial regulations for small scale multi-unit housing, if you haven't looked at that or followed it, I suggest you do some research. But essentially, it rezoned 26,000 lots in Kelowna. The issue becomes that a lot of the additional inventory is actually going into the rental market. And there's actually no master plan communities that I'm aware of for single family homes to increase single family homes to the marketplace. So if you own a single family home, the value is going to compound moving forward because we're not producing any more single family homes, or very few in relation to the amount of other homes we're providing. So with the direct proportion of more multifamily homes compared to single family homes are coming fewer and further between, which will continue to hold its value, if not increase the value substantially moving forward once we're across this time frame and hit a cleaner time. When you're looking at the real estate market on the townhome side of things, only 55 townhomes sold in the month of October. So this was compared to 228 new listings. A lot of supply coming onto the market. Again, a lot of relist, and these are going back to the previous comment is we're seeing lots of new inventory hitting the marketplace, but a lot of them are cancellations and relists. And going back to Bill 44 and the multifamily development, we're seeing these homes, these townhomes, 4 at a time, maybe 8 at a time, maybe 10 for any new developments. And this is just what's actively listed. There's a lot of off-market deals on the townhome side of things. But when you break it down, looking at the months of inventory, total months of inventory was at 10. So single family homes was at 9 and the total market's at 10. So there's lots of choices still out there and less pressure from a buyer point of view. The trouble we're seeing in the dynamics in the townhome market is we have a mix of 2021 and older, which are able to offer a slightly lower price point because of when they're built. The acquisition cost for the land was less and the build costs were also less. But when we're looking at townhomes built 2021 and newer, we've had not only inflationary costs on the land, the acquisition, but also huge increases in build costs. So we're seeing the amount that the 2021 and newer can sell for is a lot more to make the numbers work than what a 2021 and older would look like. So that is a dynamic we're seeing in the marketplace. We just can't build them cheap enough that the market will support it. Without getting that turnover, we're seeing additional homes sit on the market. And with that, I mean, prices dipped slightly. Median prices was over at 645,000 and the average price point on townhomes was 647,000. Townhomes, we're seeing a little bit more negotiation, but buyers have a lot of leverage here. It seems, especially the older units, those are priced to be able to sell. You'll be able to get in a little bit cheaper than what you might be able to get to in a newer home. We're starting to see, and we're continuing to see buyers make those choices. But for new development, it's tough to put it back into the market. One issue we're seeing in development is we're not having enough turnover. So the turnover is not creating that filter down effect. Oftentimes developers, once their project sells out, they'll redeploy that money into the same economy. They'll buy that next single family home development and start the process, rinse and repeat over and over again. But the numbers aren't making sense these days. And so we're seeing a little bit of that stall out on the development. The apartments and condos, looking at it, 84 condo sales this month. Last month we had over 100, and that was 3 months prior. We were hitting over 100 sales, but we're back down to 84 sales and 806 active listings. So looking at this, there is actually still 10 months of inventory. So similar inventory supply compared to what we're seeing on the total market and on the townhome market. Median prices is around 430,000, and average price point at 474,000. Days to sell, 54 median days and 75 days on average which is definitely taking a little bit longer, but once they do sell, things are still moving over. So the condo market is still adjusting. Developers, and this isn't including resale properties and off-market deals, that some of the new developments like Mavala and Water Street by the Park, and there's a number of new multifamily apartment developments that we're not seeing the total sheer supply of those because they don't actually hit the marketplace. So that's something to consider. This is only one little bit of a snapshot of inventory, also sales. So the condo market is still competing for the same buyers, and affordability pressure is real at this point. So it's a great opportunity for first-time home buyers or the potential for investors. I mean, looking at what might be coming in the new year, and I know we can't count the chickens before they hatch, but looks like City of Kelowna might be adjusting the short-term rental restriction moving into the new year. Having a vacancy rate of over 3% again, City of Kelowna has the opportunity to opt out of the short-term rental restriction. So we'll see what happens on the marketplace and what they decide to do. So there might be, as an investor, some more solid options out there coming. If you're willing to take a little bit of a risk and hedge it with the long term, if you can rent it out long term, or maybe you get something at Country Club and you put 8 months out of the year students in it, keep it as a potential short-term rental, there might be opportunities there. And if you do want to see some of these investment opportunities, stuff that is probably going to have the best opportunity to cash flow, reach out, give me a call, shoot me a text message. So what does this all mean to Kelowna's real estate market? So, I mean, overall, I think Kelowna's real estate market is feeling calm. It's not crashing. Wouldn't necessarily climbing either. Buyers are taking a little bit of time to think, take a deep breath, and making sure they're making smart, educated decisions. But sellers who really adapt to the market are still getting pretty strong prices. So as we're heading into winter, things we're going to likely see is sales volume is going to continue to flat. I mean, we're heading into a seasonal slowdown, but what we're seeing, prices should stay fairly steady. You know, unless we see an extreme inventory spike, the one area where we might see prices drop down a little bit more would be more in the apartment side of the market and potentially some carryover on the new development properties. But when you're looking at single family homes or maybe some of those older townhomes, look for those properties continue to hold their value. If you looked at my last video that I did regarding the interest rates and how the adjustments and how Kelowna's real estate market has adjusted to interest rates in the future, you can expect to see prices increase this spring with that information alone. So if you're planning to buy or sell in the next few months or even this spring, the key is really preparation. So pricing and presentation is mattering more now than ever. And if you're thinking about buying, this slower market is giving you more breathing room to make you allow you the time to find the right fit. So if you have any questions on the real estate market, if you're thinking about doing something, give us a call, shoot us an email, text message, respond in the comments. And I would love to get your take on where the current market's at, what you're seeing out there. And if you want to see a full breakdown of this and you want to sign up for the weekly email, sign up below in the comments and we'll get your report out weekly